Hello and welcome to the week ahead video with me, David Madden. Before we get into the major events of next week, let's just take a quick recap of some of the large news stories in the past week. Broadly speaking, there was a sell-off in stock markets around the world as there was a speculation that the European Central Bank might look to taper their bond buying scheme sooner than expected. We heard from the ECB yesterday, and in relation to the stimulus package, the ECB stated that that particular topic will be discussed and debated in December. So it seems that the European Central Bank won't be making any major decisions in relation to its stimulus package for several months just yet. Hence why we saw a bit of a decline here in the US500 in the early part of the week and a bit of a rebound. This seems to be a common theme with stock markets around the world. Also, what we saw this week was we saw a large rebound in the US dollar. This day last week, the US dollar fell to a 1 month low. At the beginning of this week, Monday, Tuesday, Wednesday, we saw a strong rebound in the US dollar. But in the past 24 hours, we have seen a bit of weakness. So on one hand, we have seen a lot of volatility in the US dollar, but it is worth noting that the US dollar is very much off of the highs of the week, but it's also very much off of the lows of the week. Now, the US dollar and the US economy is going to be very much in focus in the week ahead. On Tuesday, we have US CPI, and on Thursday, we have US retail sales. And the overall theme of this particular video is going to be around demand. Traders are going to be looking at the US CPI numbers and the retail sales numbers and asking themselves, is demand increasing, is it staying the same, or is it decreasing? If you do see a robust levels of demand, that could increase chatter that the Federal Reserve might look to begin tapering their bond buying scheme sooner than previously thought. If you do see a sharp decline in demand, that could add weight to the argument that the US economy is cooling and its economic rebound is running out of steam, and that could lead some traders to take the view that the Federal Reserve might leave their ultra loose monetary policy in place for longer. Now, in relation to the CPI numbers, the latest reading of CPI came in at 5.4%, its highest level since 2008, a very, very high level indeed. It's also worth noting that the core CPI number, which strips out volatile components such as commodity prices and energy prices, that actually dipped ever so slightly. So some economists might look at that those updates and say the core CPI number, this slight drop in that suggests that actual kind of underlying demand actually dipped ever so slightly. Now, in relation to what in terms of the price action that we've seen recently, looking at the US500, at the beginning of the week or early this week, we did see the US500 hit yet another new all-time high, which really underlines how bullish the market has been. We have seen a bit of a drift lower in the past few sessions. But while the US500 continues to hold above this zone here, the zone between 4,499, where this simple moving average comes into play, and this low here in around 4,486, while we continue to hold above this zone here, it's possible the medium-term upward trend in the US500 will continue. Moving on from here, we could look to retest 4,529, and then a break beyond that might incur resistance at 4,550. Conversely, if we do see a continuation of the near-term bearish trend and we do break below this region here at 4,486, that could bring 4,465 into play. Now, also on the demand story is going to be UK CPI. UK CPI will be posted on Wednesday. The most recent reading of UK CPI showed actually a surprise reasonably, as it caught some traders by surprise, as there's a relatively large decline in the CPI. But there were some economists did question that dip, because items like package holidays and video games saw declines in prices. It's also worth pointing out the the summer sales by fashion houses began at this recently as well, and that it appears that was also a factor in why CPI declined. So traders are now going to be wondering what's demand like in the UK for a similar reason. The UK has enjoyed a reasonably good economic rebound. There have been some pockets of weakness or maybe some not so hot economic activity, but once again, if we do see strong demand coming through in the UK, that could lead to increased chatter and speculation that the Bank of England might be looking to tighten their monetary policy sooner than expected. Conversely, weak numbers in CPI could suggest that the UK's economic rebound is running out of steam, and therefore the exceptionally loose monetary policy that the Bank of England have in place might need to last in place for even longer. This year is the price action of the British pound in the last few weeks and months. Earlier this month, the British pound hit a 1 month high. That was broadly due to a decline in the US dollar. We did see a sharp move to the downside in pound dollar, largely because the US dollar rebounded, but in the past 24 hours we have seen a sharp move to the upside in GBPUSD. While it continues to hold above these three simple moving averages, it's likely to get the medium-term trend will continue, pressing on from higher. From here, we could look to target one spot 38.90, and a move beyond that could see a target one spot 39.82. If you do see a move to the downside and we do drop back below these three simple moving averages, support might be encountered at one spot 37.25. On the topic of UK inflation and demand, what also could see some increased volatility in the week ahead is the UK100, the British stock market. It could encounter volatility from two sides. If you do see if there is increased chatter that the Bank of England might look to taper its bond buying scheme sooner than expected, we might see further pressure on the UK100 as we did see in the last few days. Should that be the case, and should we continue to move lower from here, support could be encountered at 6,990, and a break below that could see a target 6,927. Conversely, if we do see a continuation of the rebound that we've been seeing in the past 12-24 hours, if this rebound continues, resistance might be encountered from this zone here around 7,090. It's also worth noting that Canadian CPI will be posted in the week ahead too. That's all from me. Thank you very much.